Hey everyone, welcome back to another Stock Market Open live stream. Today we have bank earnings coming in, and I always find bank earnings and the start of earnings season pretty entertaining. So let's go ahead and start with J.P. Morgan, and let's just sort of get an overview of what's going on with some of them. So the juice first, J.P. Morgan. Their adjusted revenue ends up beating. You're looking at 42.5 billion versus the 41.64 expected. So we've got a revenue beat at 42.55 billion again versus the 41.64 billion expected. You've got charge-offs actually coming in lower. Charge-offs coming in at 1.96 billion versus the estimate of what does this say? Charge off, yeah, 2.2 billion expected. So less charge offs than you're expecting, more revenue than expected, which is great. You've got some of the different segments here. Let's see here. Return on equity at 17% versus 15.9, so JP Morgan killing it here. 17 ROE 17% versus 15.9 expected. Let's wonder how JP Morgan's stock is doing, because this is actually pretty good so far. Oh, well, yeah, okay, interesting. Down 2.88%, so let's see what happens here. Outlook. Okay, so this is an outlook expectation, and that's that net interest income is declining. That might be why you're starting to see some of the banks submit lower interest rates for savings accounts and otherwise. So, let me also quickly see if we have any 530 data. I think today we just have University of Michigan. Oh, we have import prices. Okay, import prices month over month come in hot a little bit. 0.4 versus the 0.3 expected. However, the import prices ex petroleum come in a little better than expected. They come in flat, 0% versus the 0.1 expected. And then import prices year over year, 0.4 versus 0.3. Export prices 0.3, and year over year negative 1.4 versus 1.2 expected. So, okay, nothing scary there. If anything, that's probably better than expected. But continuing here with JP Morgan. So total deposits are at 2.43 trillion versus the 2.4 trillion expected. Gosh, it's trillions of dollars of deposits. Wild. Again, we've got charge-offs missed. Provision for credit losses also came in lower than expected. So I'm going to write down credit losses, for credit losses. I'm just going to write down sort of my favorites here. Prov for credit losses at 1.88 bill versus 2.78 billion. There we go. Expected. Okay. So what's the outlook then for Q2? JP Morgan falls 3% after reporting Q1. Why? Net interest income fell on deposit margin compression and lower deposits. Okay, JP Morgan still sees net interest income of about $90 billion. Normalization is continuing for net interest income. Net interest income declined 4% sequentially this quarter. I see. Okay. How do we figure this out here? So, normalization. Oh, I know. It's because there's so much competition for deposits. Normalization of margin for NII, net interest income, led to a 4% decline in quarter-over-quarter sequential net interest income, NII. Okay, so this is probably because of banking competition. That'd be my initial reaction to this. Like, think about the competition that you're getting at, let's say, Robinhood or Webull. They're all offering higher yields, or Apple's account. Basically, everybody moved pretty quickly at providing higher yields, and I think a lot of the banks sort of anticipated that a lot of people wouldn't move into higher yield products, and that they'd have sort of sleepy deposits, as they were known, and those sleepy deposits earn like nothing, and then all of a sudden you get a little bit of a a wake up on wait a sec, everybody's earning like 5% on their money. Even people who are not financially savvy all of a sudden are waking up to this idea that, oh, I should be making more of my money as well. So that might be part of what's going on here. Okay, write that down. All right, so then we have expect meaningful card loan growth this year. Ongoing internal deposit migration. Okay, that's probably a way, again, of saying going to high interest rate accounts. Extra money about done for lower 50% of consumers. Oh, that's interesting. Okay, so that would be the excess savings idea, right? So excess savings, quote, about done for lower 50% of consumers. Okay, that's from the pandemic. Charge-offs are normalizing. Some cracks in subprime auto. Yeah, makes sense. Mostly because I think just when car prices plummet and rates are so high, there's no way people don't give up. Multifamily book performs quite well, blah, blah, blah. Okay. Yeah, that's JP Morgan. That's a little surprising that that they were down on some of these numbers, but I guess it makes sense on the margin decline. But that's JPM. Now, we did have Wells Fargo as well. So let's look at Wells Fargo. What do they have? Wells Fargo, also lower provision for credit losses. So this is now the second bank in a row doing that, which I like to see because you don't really want to see provision for credit losses skyrocketing. It would suggest some real credit issues. So you got $938 million versus $1.27 billion for credit losses. You've got deposits that come in a little lower than expected, $1.34 trillion. You have Q1 revenue, $20.86 billion versus the $20.21 expected. Yeah, their net interest margin fell a little bit as well. So we'll say the NII margin also a bit lower than expected. This has to be deposit competition. Or it's also possible that people are finally moving their savings back out into like the stock market, for example. So I'm going to write that down. Competition for savings and moving money into other assets like stocks is likely contributing to banks seeing lower NII. Okay, interesting. But, you know, then you're also starting off earnings season with a little bit of a miss. It is the banks, you know, how much that means for finance, probably not that big of a deal, but, or sorry, for like tech stocks. But for finance, it's a bigger deal. Okay, so remain committed to improving our efficiency. Property portfolio still performing well. Now, well, that's what they say now, but I'll write that down too. Property portfolio still performing well. Okay, and then we got, I think it was Citi was the last one. Take a peek at Citi. Citibank. Yes, it was. Citibank. Okay, Citibank we have. Revenue, $21.1 billion. The estimate was $20.38. Net interest income, $30.51. I'm not sure what the expectation was here, though. Sees higher fiscal revenue in the year, $80 to $81 billion. Expects higher expenses, though. Higher cost of credit, lower revenue. Yeah, okay, also expecting lower revenue. Tough quarter in Q4. Markets bounce back, they say. All right. Yeah, not anything actually really interesting on cities. And I don't have that forecast on net interest income. Let me see how they did. So, JP Morgan down 2.6. Wells Fargo is only down about 5 basis points on this. And Citigroup is actually up for 1.43. Okay, so it seems like pretty baseline here. you do have a little bit of red coming out in the Qs and the AM. That's probably just because yesterday was pretty wild. Yesterday, what happened was, first of all, you had this excitement and euphoria that sort of started at the beginning of the day on PPI. But then what came mostly out of nowhere on the timing of the day was Apple. Now that was a really interesting one. Apple came out of nowhere with its timing announcing the M4 chips, now which are going to be more AI focused. Now what I thought was really funny about that, hold on, let me do that. Let's see here. There we go. That work? Hold on a sec. Oh, here we go. So what I thought was pretty entertaining about that was that I actually had on eHack written a piece, and I made a YouTube video about this, about Apple on April 2nd, so the day after April Fool's Day, like 10 days ago. I made a video and I suggested that Apple's probably going to come out with their own AI chips. And not only are they going to come out with their own AI chips, but they're going to purposefully brand them AI. And I got some comments on my YouTube video where people are like, oh, yeah, that's cool that you think, now they're going to do these new MAI chips, but Apple's M chips already have AI in them. And I'm like, I know they already have the neural net processors in them, but I'm saying they're going to have a whole new cycle refresh for AI chips. And then that's how they'll try to sell it, because that's what Apple does best, is they market. And people were complaining about my Apple video, and I made the video 10 days ago. You can still look it up. Just type into YouTube, Meet Kevin Apple. And so you'll see it. And you'll see me debating people in the comments like, that's what Apple does. And people are like, nah, man. I'm like, all right. Anyway, sure enough, now we have the Apple AI chips that got announced yesterday. They're the M4s. And really what they're trying to do is run most of the neural net processing for AI applications on people's device. And that's a way of pitching privacy and security rather than sending all your data to like OpenAI. And it's actually very similar to what we talked about in that Apple research piece from, again, 10 days ago, where Apple's like, yeah, we're prioritizing running things on device. So totally makes sense. Now, that obviously led to everybody getting really excited about AI again, because Apple is, well, frankly, the last to show up, also kind of in usual Apple fashion. So kind of interesting, but that led to a somewhat unexpected move in AI yesterday. I mean, NVIDIA's run into the close yesterday was absolutely crazy, and you ran. It was wild. And Apple ran, what, like 4.2% yesterday? Let's see here. And let's jump back here. Now look at this. As soon as that Apple announcement came out at around 12:55, oh, it was off to the moon. It was crazy. So, yeah, 12:55, Apple ends up 4.3%, which I was a big fan of Apple. Talked about 10 days ago that I think, after that Apple AI research piece, I'm like, they're not sleeping on this. Like, they'll come out with something pretty good, and I'm going to increase my exposure to Apple, and we did. So that's exciting. But I do think things got a little too hypey on that yesterday. At 4.3% on Apple, biggest move in 11 months, wild. And then, of course, this move on NVIDIA here, seeing a 4.66% move, or sorry, 4.11% move in the AM, wild. You ran all the way up to 909 in the pre-market. So now you're actually sitting at about $900. So we'll see if we get back under 900 on NVIDIA this morning. I think ARM also got excited because these are new ARM chips at Apple, and you're also seeing some of that excitement move out of pricing. So a lot of sudden movement there. So then you've got AMD, also was up about 2% yesterday, and now it looks like it's falling 2% in the pre-market. So a lot of eradicating some of those wild moves yesterday. And so we'll see what that does for the broader market, if that ends up pulling down the broader market at all, or what it does today. Who knows? I think some of it is going to be based on what happens with the consumer sentiment survey. The sentiment survey comes out at 7 a.m., so unfortunately it's a little bit later than what we would expect. So for data release, but that's all right. Okay, I'm getting a bunch of updates here from JP Morgan's Jamie Dimon. Regulatory headwinds in M&A, meaningful growth in credit cards, quite clear the American economy is strong. Ooh, I'm going to write that down. Okay, so... all right. There we go. Jamie Dimon, CEO of Chase. Quite clear the economy is strong. No light at the end of the tunnel for commercial real estate. No light at the end of the tunnel for commercial real estate. Wow, that's a crazy line right there. But not seeing a meaningful improvement. Not seeing a meaningful improvement. This must be his opening statement in an earnings call. Credit card charge-offs are normalizing. Okay. People really like to pay attention to everything he says. So, and I mean, as somebody running the largest bank in the world, I think that makes a lot of sense. Remain cautious on buyback trajectory. Consumers who are struggling are cutting back. Okay. All right. Struggling consumers are starting to cut back. And loan growth in credit cards has moderated. Oh, that's interesting. Because that's been something that's sort of been a bit of an area of concern. This idea that, you know, people keep borrowing like crazy. Loan growth in credit cards is moderating. Some cracks in subprime autos. Yeah, we saw that comment earlier too. Okay. So, what's next? Well, let's find out. So, I think gold hit 2,400 if I remember correctly. And let me see where we sit right now. That was another high last night. Well, gold's now at 24.12. Gold. So gold is up 1.68% at 24.11. Wow. Silver is also up. Silver up about 3.5% right now. So we'll just write these down as commodities. And then we'll go with silver up 3.59% at 29.27. And so if I go out on the 1 year, actually I could go out 5 years and it's the highest level for silver as well. Nice. At the same time, bonds, how weird. Bonds kind of slipped a little bit on this banking news. So, well, bond yields rather. The 10-year sitting at about 4.5. That's down from about 4.57. So 10-year down to 4.5%. And so I wonder how that's moving interest rate cuts. We are right now pricing in 1.82 cuts by December 18th. December 18th. Pricing in 1.82 cuts. And then the 5-year break even. Let's see how that's doing this morning. We just don't want to see really big runaway lines in the expectations. Yeah, we're just at the top still. 2.533 on 5-year break even. Okay. So how about oil? How do we sit there? Oil this morning is, yeah, still at kind of its peaks here. 91 on Brent, 91.12 on Brent. Wow. And then BTC we saw is what, mid 70,000 right now. Let's get into that. No big AM pump. Did we? No, this is the 30-minute chart right here. And A little bit over here around midnight, but actually not that 3 to 5 a.m. like you often see. And you're sitting right at that resistance level. That 71.1 level is really working hard to kind of keep a lid on BTC there. Somebody says VIX is popping. Yeah, that's unsurprising given a lot of the red that we're seeing this morning. I mean, frankly, JP Morgan being down 3.2%. And the Nasdaq's almost down a full percent. Yeah, today could be a little, like, all you need is a bad Michigan sentiment report, and you're going to have a bloodbath today. I'm not advocating for that, but I'm just saying, like, the market's a little pissed today. They're waking up and choosing violence. So. Big Daddy Chet. Hilarious, he doesn't use TradingView. How do you know I don't use TradingView? I love TradingView. In fact, if you go to ehack.com, I literally embed TradingView on ehack. So you know what? That is hilarious. It's like, make a trade on TradingView. Oh, you can't. Maybe that's the funny part. There has been severe underinvestment in new metal supply. Commodities are going to be high for a while. The cure for high prices is high prices. Takes 20 years to find and bring on a new copper mine. Yeah, it's the same thing they said about lithium, Steve. Yeah, U.S. warning of attacks from Israel to Iran. Yeah, you know, they've been talking about these attacks being imminent over the last 2 or 3 days. I'm not sure that's the only thing. I think bank earnings here, and you know, people are kind of going into earnings with these very, very high valuations, and so I think what you're getting is, sure, there's geopolitical concern that will always weigh on markets, and I do agree they're going to be more elevated right now. But I think you can actually look at oil as a way of seeing how severe the Israel Iran strike idea is, because and strikes occur on Iran like regularly, not necessarily from Israel though. So there's this concern over a broadening issue, and that is why oil has run up to about $91. But I think if that was solely a freak out moment for markets, I do think that Brent would be higher. I think we'd be knocking on the door of 100. So I do think there's some disappointment in these banking earnings, suggesting that maybe earnings won't actually be as great as people think. So I think that's something that's worth paying attention to. So yeah. Anyway, let's see here. Yes, that is true. You can connect TradingView to different brokers. Now, one of the things that was actually pretty wild is FTX was one of the crypto brokers who did that, because TradingView is pretty awesome. And FTX basically just incorporated all of TradingView and their API into their brokerage app. That's pretty cool. So, but yeah, you know, I mean, ultimately, what I find a lot of people do is, and it depends on what broker you'd like to trade on, you know, what you get familiar with. But what I see a lot of people do, what I like to do too, is you could plan TA and play TA out on TradingView, and then you can move over some of your favorites to the platform that you like to use if you don't have integration. Like Webull doesn't have an integration, so you kind of have to separate them. So let's see here. Why does the street care so much about softer NII? Well, I think what it says is that you're getting anytime you get sort of a missed expectation at the beginning of earnings, it's not so much what it says about the individual company as it is, like, remember when Netflix at the beginning of 2022 had bad earnings? It sort of sent this wake-up call to the broader market that, oh, wait, earnings don't only just beat. I hate to say it, but sometimes markets can be very basic like that. I think we give them credit for being very, very, very seeing all and all knowing, but yeah, I don't know. I think there's a good shot that when you get disappointing earnings that begin, everybody starts taking some chips off the table for big beats. Especially, I mean, seeing JP Morgan move 3.2%, I wonder what the expected vol was, but that's a lot for JP Morgan. Especially since, like you said, it's not like that big of a miss. But let's go to expected. Okay, so earnings estimates. Let's see what the expectation was for volatility. Yeah, okay, interesting. Yeah, so the average move for JP Morgan after earnings is 2%. The implied move was 3.5% today. So you did get the move that was implied. And then the question is, why did we have a higher implied move today than we did previously? And so, I don't know. It'll be very interesting. Is it the start of a miss for earnings seasons? I don't know. Or it's nothing and everything will be fine. We'll see how the market moves when it opens up. The University of Michigan report is at 7 a.m. California time. Yeah, and the 10-year going down, I think, is really driven here by what you're seeing with some of this JPM commentary about, the lower-end consumer cutting back, credit card growth expanding slower, cracks in the subprime autos market, no saving of the commercial real estate market, no problems, though, in multifamily, for example. So some of these comments are not screaming, yay, everything's kind of going to keep going to the moon. That's probably that. So let's see here. Double the world's supply of gold in one find. Some people just wake up angry. G4G, my goodness. Double the world's supply of gold in one find. You people. Don't call Steve you people. He's commodity Steve. He's a good guy. The lag effect will wreck a lot of ya. Hope not, but it's just how ya all macro, micro, emotional investors roll. What is a macro, micro investor? Did you pick one? What else? So, Thinkorswim. Yeah, that's TD Ameritrade's platform. That's pretty good. Ging D. Yesterday was very green. Yes, indeed. Fed Chair Biden will save the market. That's funny. Very interesting. So, all right, very good. Let's see what else here. Biden. Yeah. Love you, Kevin. Ain't angry. Okay, all right. Yeah, it's okay to be you know what? It's just you're not angry. You're just passionate about gold, or like unpassionate about gold is probably the better way to put it. There you go. All right. So, MetLife's $98 billion real estate risk may not be that risky. Okay. Yeah. Interesting. Rent relief will be brief as apartment crunch looms. Yeah, well, we've been talking about that one for quite a while, this idea that as you go in to buy multifamily, you better be getting a discount because you're going to be lowering some rents. That's okay, though. That's all part of a normalization. Flight to safety bid this morning. Okay, let's see that the comment here. The heightened risks around both bank earnings kicking off, oil rising, bonds falling, so a sign of a flight to safety, and the geopolitical risk. So we've got, let's see here. Big banks' first quarter results offered the latest window into how the U.S. economy is faring amid an interest rate trajectory muddied by persistent inflation. Wells Fargo and JP Morgan missed estimates for NII. Citigroup topped estimates. And then we saw, what we're seeing, future slightly red. Yeah, well, we've kind of already covered that. Okay. What else? Citi CFO says 7,000 employee job cuts will appear in the data over subsequent quarters. In the data. Boy, that sounds insensitive. How many employees do they have, though? Citibank employees. Let's see how many. They have, 239,000. So 7,000 cuts. Seems like a lot, but 7 divided by 239 is 1.25%. So it's pretty nominal. Somebody's asking about a double top on BTC. Yeah, it's one of the considerations that I'm watching is that's kind of, I mean, it's a little hard to say at this point double top because it almost kind of looks like a triple, but there's clearly this topping effect happening in markets. It's not just Bitcoin though, it's also in the Qs, right? If I go out to the day chart, we've been topping out for a moment here. Our high was 449. We're looking to open at about 441, which is pretty well in line with where we've been trading. This is about 439, our line right here. We just keep bobbing around this range here. So we're kind of getting stuck. The same thing has been true with the SPY. You're getting this sort of topping pattern. So it's happening at all of these sort of risk assets. And where you're not seeing it is like gold. You know, you keep hitting new highs there. Oil's hitting new highs. The bond market, in terms of people dumping bonds, is hitting new highs. So your yields are rising. So you're at this really weird moment to try to suggest, oh yeah, everything's going to go to the moon. To really have a breakout here, we need really strong earnings. We would need lower yields. We would need, these safe haven assets like gold and to some extent oil freaking out a little less, probably less geopolitical drama as well. And so these are a lot of asks when valuations are potentially at their, max for the near term. We don't know that with certainty. It's possible that we're just setting up for the next leg up. But yeah, there's definitely there are definitely a lot of people looking at markets going, all right, is it time for a little bit of a pullback? Again, like a little 3-month pullback wouldn't be such a bad thing for markets. It'd probably be pretty healthy. But yeah, this earnings season could definitely drive that. So we'll see. So let's see. JP Morgan's challenges overshadow mixed results. Bank shares are pairing some earlier losses. People digest, except for JP Morgan. JP Morgan, blah, blah, blah. Where's the... Oh, yeah, okay, it's just digesting net interest margin. We already covered that. What else? Yields take a break, even if inflation pressure doesn't. Ooh, I wonder if we got any new updates. I don't think we're going to get a new update on multivariate core, but we do have new CPI data. So our next one, our last release was April 1st. Bummer. When are they going to come out with the next one? Don't know. Oh well. Alright, so no new multivariate core yet. Probably after the next PCE report. Okay, fine then. Alright, next. Let's see what some of the suits are saying in the AM here. And see if we got any bull and bear pieces to explore. Usually we do. It's kind of fun. So let's go into the latest and greatest. Let's see. How about yesterday evening? Did we get any? Ooh, TS Lombard. They always have some juicy stuff. What is this? Risks large and larger. The main risks we are thinking about and debating internally, and which clients have asked us about. The issue for Global Watch. In this issue for Global Watch, the biggest and most significant near-term risk is CPI. All right. And then after that, like, how is the Fed going to react? Blah, blah, blah. Okay. Labor market. Bottoming pattern for near-term revisions. Political risk. Is June too soon? Yeah, this is just speculating on the Fed. Okay, that's no fun. That has already been done. U.S. equities are not the only game in town. Here's a piece by T.S. Lombard talking about investing in China. A lot of people, by the way, Goldman and a lot of those on Wall Street, really pitching China as the next frontier. No landing, but a beautiful rebalancing. Good policy or good luck? That's interesting. The beautiful rebalancing. Even if this is not a full-fledged second wave of inflation, it could be a sign that central banks must do more to force inflation back down to their targets. According to the Bear's latest thesis, policy is not yet tight enough, and basically we need more rate hikes. Yeah, that would be pretty bearish. Okay. What else do this suit say? Gold breakout. Chase or fade. Ooh. They have a little history here. Okay, I'm going to open that one up. Hold on, give me one sec. Let's see what they say about gold. Chase or fade? What's the answer going to be? What do you all say? Chase. Steve appears. Chase it, baby. Okay. Okay. There are decades when nothing happens, and there are weeks where decades happen. Nice. That's a quote on gold. Looking at history, gold price can stay in the doldrums for a long time, but when it does break out, the surge is usually fast and furious. In deciding whether to chase or fade the recent gold rally, it might be useful to draw some inspiration from past breakouts. Here I define a breakout to be a more than 10% move. 4 gold breakout episodes in history since gold started trading freely. Okay. Yeah, look at that. So here we're aligning the sort of growth in the price with CPI and real rates, GDP growth. The breakouts always occurred when GDP growth was positive. Unemployment rate, various levels between 3.8 to 5.7. CPI anywhere between 3.2 to 7.8. Okay. Implications. Gold surges 2 to 4x within a short period on a breakout. Took 13 years to revisit its 2011 peak when it broke out in March of 2024. However, when it broke out, gold surged 4x in 2 years, in 72, 78, and 2x in 3 years, 2008. Wow. Yeah, that actually suggests that there's a whole lot more to go for gold. Gold price breakouts happened when real rates were positive and peaked when they turned negative. Okay, well, when are they going to turn negative? That would be when we have rates below the level of inflation. So, you know, interesting. That could take a while. A simple entry and exit signal. In the current high real rate environment, it seems there's ample room for gold to run. Yeah. Recession close by. Although the gold market could suss out a future turn in events, breakouts have been associated with a near-term recession. Oh, great. Following the 72 gold breakout, the economy was in a recession by November 73. Oh, wow. Following the 78 gold breakout, the U.S. was in recession by 1980. Again, in the energy crisis, or the catalyst was an energy crisis. The 2008 gold breakout coincided with a global financial crisis. Oh, dear Lord. That is not good. Oh, no. So, again, here's that snapshot. And, yeah, I mean, they're suggesting that gold could go to $4,000 to $6,000, basically. But that would also be through a recession. So a recession occurred. It's almost like gold was sussing out a recession. The recession occurred, and the recession is actually what skyrocketed gold. The recession that gold may have sussed out on a 10% breakout helped boost gold 2 to 3x. Wow. Look at gold versus rate cut cycles as well. Yeah, well, that's probably because most rate cut cycles occur because of recessions, right? So when in recession, rates plummet fast. So would make sense. Real rates go negative to support growth and ending recession. Okay, so basically, I mean, that's kind of a historically expected argument for gold. That, hey, if you're going to go into a recession, buy gold. Peter Schiff must be throwing a block party right now. Peter Schiff throws island parties. Gold hits 5K. Peter Schiff is running an island party. Okay. Gold breakout episodes tend to bode poorly for equities as a recession looms. Oh, this is like the worst bear piece ever. It's great for gold, but this is very bad for stocks. What's sussed out? Sus is like you're suspicious of something. It's like an Among Us phrase, like, oh, you're sus. So, like, I'm suspicious of you, therefore you are sus. Or something sus is happening. I'm probably not explaining it perfectly either, but you know, it's like as they say, a Gen Z thing. I'm trying to figure all that out myself. I'm a millennial, bro. Generational differences are kind of cool. All right. Corporate credit was a major underperformer during recessions. Treasury returns were mixed. The USD was weak. Well, duh, because rates are going down. I mean, this all of what I really dislike about this is that all of this makes sense. Everything they're saying makes too much sense. When gold and see, this is what Steve's been yapping about too right here. When gold breaks out, other commodities tend to go along. 2008 was an exception as there had already been a China commodity boom in the preceding years. Not this time. Should history repeat, it's not too... Where's the link to buy gold? Please join the second wave of inflation club. Oh, it's not too late to participate in the gold rally. An investor with a 2 to 3 year view could expect to see gold potentially double from here. Oh, gold might outperform Tesla. Everything outperforms Tesla. So today, with real rates still high and a recession seemingly far away, it's too early to call the end of the ongoing gold rally. Gold breakout is an ominous sign of things to come. So I did mention that as well. About 2 or 3 weeks ago, I'm like, you know, it's possible gold could be sussing something bad out. I did mention that. Weird. Okay. So... oh, yeah. Oh, let's listen into CNB Sizzles for a moment. And, see what we got.
In particular, and that there has set a deadline.
Yeah, the CPUs in particular made by the likes of AMD and Intel over very important. And it extends beyond telecom, obviously, as well, into just into the PCs that are made and provided for in China as well. But you can see the weakness in particular, I think AMD down as much as perhaps 3%.
Yeah, phase out by 2027 is the headline. And then the only other sort of negative data point from China was the export data. I don't know if you saw it, down 7.5%. And that is worse than it has been. And also, it's worse given that there was some optimism lately on China.
Jeffrey Jones here says, sus has been used in Australia since back in the early 90s. That's good to know. I didn't know that. So, y'all deserve credit. Not COVID video games. All right.
Bullish on China.
Yeah.
We saw outflows in Japan for the first week last week and inflows into China.
Yeah, everybody keeps saying FSD is getting good. It's still 2 steps forward, 1 step back, in my opinion. Just yesterday, and I keep seeing this on the internet too. Just yesterday, once again, the car totally in a different area, totally dodges the right turn lane, stays in the straight only lane, makes the right turn from the straight only lane, and this is 12.33. I know we're on 12.34 now. That actually just started rolling out, I think, yesterday or the day before. So I'm excited to get that update and test that, but we're just like, what is going on? Yesterday, or not yesterday, it was maybe about, I think it was Tuesday, we had 12.33 drive to an unprotected left with the team, and there's oncoming traffic, and if the car went when it first wanted to go, it would have been okay. But it hesitates, and then it like slowly rolls into the lane of oncoming traffic, and then it was too late to turn, and so we had to pull the wheel back, accelerate a little bit to go forward, and right again a little bit to pull out of the oncoming traffic lane. It's like, version 11 never did that. It didn't have that kind of like stupid problem, I like to call it. But that's also quite unsafe. So I get it. Everybody's like, oh, but Kevin, it's an end-to-end neural net. It's going to keep getting better. But Kevin, I want to say FSD is the greatest thing ever. I've used this stuff since 2017. I love it. But I'm telling you, there's some major setbacks in version 12 that I don't understand, but the car is just incapable of understanding how to use a right turn lane, apparently. It's incapable of not clipping curbs. And apparently, it's scary in unprotected lefts. Not always. You know, it's going to do fine many times, but it's that 1 out of 10 times where you're like, what the f... Shouldn't be doing that. So it's really weird. I don't know. So, yeah. The current neural net FSD uses consists of senior citizen drivers. That's like an insult to senior citizens. It's worse than senior citizens. I actually, honestly, that's the other thing. Is I actually think senior citizens probably drive better. But I saw somebody did a little tracker on Twitter, and I thought it was really interesting because I've been complaining about this too. Is it's so slow to stop at either a red light or a stop sign. Where was it? Oh yeah. Here's somebody sussing it out on a left turn. Look at this. They posted this and they say, my car needed to turn left. The map data showed left. The turn signal did not turn on. Then suddenly went left from the straight only lane. I literally experienced that last night coming home from the airport on a road that's very clearly marked and not a road I've been on before either. Oh yeah, this was the video on the slowing down. And so like here you have, basically, a car stopping at a red light within 11 seconds. This is sort of like your normal. And this is the latest version of FSD. And it takes nearly twice as long to actually come to a stop. It's weird. It does the same thing at stop signs. And then when it does it at stop signs, you're kind of like, bro, get to the frickin' stop sign. So somebody here says, stopping at stop signs and then turning right takes an eternity. I ride the accelerator to speed things up. Yeah, as you should, because it's freaking annoying. It's very bizarre. So, Let's see here. Well, okay, yeah, sorry. I used autopilot since 2017 and sort of FSD, yeah, only in 22. But my point is, I've seen the evolution since 2017 because autopilot was the precursor. And autopilot on the freeway is basically the same thing as FSD because you had the auto lane changes, you had the exit the highway, you had, obviously all the adaptive cruise and everything. It's basically been full self-driving on the freeways. That's basically the same. The only thing that really changed with FSD is cities and stoplights and traffic lights. Back in the day, autopilot wouldn't stop for a red light. So, okay. Yeah. What else? All right. Imperfect data, imperfect results. Well, that's one way to put it. Costco sold more than $2 billion worth of gold since January. They're selling it at a perfect time because what they really would want is that people end up buying gold and then doing well on the investment. That would be the best case scenario for Costco. Even though their margins are low, people are going to be like, oh, where'd you buy that gold? Costco, bro. If Tesla drops FSD to $99, bullish or bearish? Well, it just... I think it's necessary. I think it's overpriced. I've said that for a while, but unfortunately, it, then leads to once again a compression in potential profits. So that's been what's making it's been what's making it very difficult to value Tesla. I did a Tesla valuation video yesterday, and I think the assumptions that you really have to make are very excessive. To try to get it going without the guidance and the vehicle deliveries we need. If we had vehicle deliveries, it'd be fun. It'd be easy to analyze Tesla. It'd be so easy if you had the vehicle growth. It would be the easiest stock to analyze, and it would be such a slam dunk that it's a good deal. But, losing that growth, yeah. As a programmer, I'm telling you these small things will be solved soon. Yeah, but remember, this is not a programming problem. Version 1 to version 11 were programming problems. This is a teaching the neural net problem. And yeah, I know. It's the idea is, all right, well, we'll just keep running the net. We'll keep training and training and training and training. Or they're going to crutch and they just program it in. But, then you're that much further away again from robotaxi. So, I don't know. Where was that gold article from? Yes, I actually was going to mention that, and then I got distracted because I wanted to cite the source too. This is from Peter Schiff? Huh? I'm just kidding. No, it's actually from UBS. It's a UBS piece. It's really a good piece, I have to say. Like, damn. All right, so... Alrighty, well, let's see here.
Dig into that, see what we can do here between Mike and Sarah. But if you haven't noticed, we are on track, or at least looking for what will be a significantly lower open. It's been a I don't know, volatile week. Can we call it a volatile week, Mike? All right. We got a lot more Squawk on the Street for you when we return.
At Baird, we have investor relationships in 35 countries.
Investor relationships. That's just a weird phrase. I feel like I haven't heard that. FSD highway part is still V11. Makes sense why the highway part is still good. Yeah, I don't know. I really want FSD to be amazing. But again, I keep getting step backs. I gotta see if I can get the latest software update. I wonder if they pushed it tonight. I still, by the way, have, like, I'm taking the car in for service next week because my 3G modem or the LTE modem or whatever it is just stopped working. So I have to basically just connect to Wi-Fi to get the upgrades, which is fine. I don't mind doing it. but it is a little annoying because I can't play music, I can't navigate, so it makes it harder to use FSD. I have to like manually type in addresses and it doesn't suggest them anymore. So pretty stupid, but that'll get solved. I'm not so worried about that because that's obviously some kind of issue or glitch. So anyway, all right, let's see how some of the sticks are moving this morning. So let's see here. The Qs are down a whole % in the AM right now. Yeah, Nvidia's moving down. I think what you're getting is unfortunately some depression for the enthusiasm around AI earnings after bank earnings. That seems weird, but it does look like you're getting some of that. And yesterday's rally into the close was just euphoric. Like, Apple's announcement was not a surprise. But like I said, we predicted it 10 days ago, and I made a video on it. And people were making fun of me in the comments. They're like, Apple's not going to announce AI chips. Their chips are already AI. I go, you watch. I got to find that debate in the comments because it'd be kind of funny to make a video on. But anyway. Yeah, we're just gonna, yeah, that's what we'll be. We'll be called Kevin Schiff Johnson. We're gonna move all of our Tesla investment to just gold. What's a puddle pirate? I don't know that reference. I gotta look that up. Dad with the iPad says if I went to the military, I'd be a puddle pirate. That doesn't sound nice. Puddle pirate. Slang for Coast Guard. I did not know that. Used in jest due to the public perception of the typical role and mission being near shores versus deep water. That's messed up. I did not know that. Okay. Good lord. I actually would absolutely despise that. I'm not a water person. Air Force would be way up there on my level of interest. That or like, I don't know if I could pull it off, but you know, like, I don't know, special operations or something. Those two things are much more desirable than I absolutely despise water. So anyway, it's not something you couldn't learn though, right? Learning how to hold your breath longer and stuff. I don't know. That's just not me. All right, let's see here. Apple 43 bips to the downside. SPY's rotating on. Everything's kind of rotating to the down. BTC down. You've got JPM's still down about 3%, although it is recovering a tiny little bit here. Nvidia down 1%. Okay, I mean these are pretty nominal as results, so not going to be a Navy diver. Hell no. It's like no. No way. Oh wow, look how little green there is. I mean, so we're going to get way more green as usual, right? You're going to start the day here with, what do you got, seven greens? We're going to get a lot of green here in a moment. So we'll see what happens. And then if you flip on down, you've got AMD actually leading losses right now, along with Intel, ASML, Affirm, Coinbase, Supermicrocomputer, Embraer. Let's see if, is AMD continuing to drip here? To bleed? Doesn't look like it. Yeah, this is a little bit of a depressing morning. You're right. Somebody here is like doomer morning. It kind of is, isn't it? I mean, like, we literally read a gold piece that actually makes a pretty damn convincing argument for buying gold. It's the first, like, very convincing argument. And then you have, you know, you're coming off a euphoric day yesterday with some depressing earnings this morning from banks, somewhat depressing. But then you're going to have 7 a.m. data. That's 7 a.m. Data, you know, for the Michigan report will either do nothing or I don't think it'll create euphoria, but it's unlikely. It's unlikely that the Michigan sentiment report creates euphoria. Let me see what the expectations are for it. You have 1-year inflation expectations 2.9, 5 to 10 2.8. I think that's going to be an easy beat in the face of oil. Like like I guess you'd be called a miss, but like a higher number wouldn't surprise me at all. China's intensifying its efforts to reduce reliance on foreign technology amid American chip manufacturing. So how are Intel and AMD not down more? Well, I mean, I think there's a lot more of a market to chips than just China. Kevin reps Ventura daily, but hates the water. Hypocrisy is thick. Well, see, I disagree with that. I don't go into this water. I just look at the water. I observe the water. I drive by the water, or I fly over the water. I don't go into the water. So, those things are different. Anyway. Exactly. You could be a water admirer. Alright. Ay. Okay. So, what do we have here? Bond's still sitting at 4.5. We're getting the bell. Let's see what happens. We got about 45 seconds to go.
Next year is where the consensus is right now. So you're well over 40 times the lowered next year's estimates. And so now the stock has actually bounced nicely around 160 a few times. So I don't know if that's where the buyers are sitting. It's just above a $500 billion market cap.
I mean, the question is on deliveries, and that's why Wells Fargo took their price target down, not expecting fewer deliveries. But they do wonder, can Elon Musk razzle-dazzle investors, that's a quote, on full self-driving? He's teased the robo-taxi now. Although NBC News did an interesting story about how the California agencies that would regulate robo-taxis haven't heard from Musk.
No.
He's teasing this is going to come out in August, but the Department of Motor Vehicles and Public Utilities Commission saying they have not applied.
There you have it, an opening bell for this Friday. And given, of course, what futures were, not a surprise that there's a lot more red on that board than green. Here at the big board, it was UL Solutions.
So that is quite red right now. I want to see what direction things are going. Let's try to find it here. We have, if I go into the market here, JP Morgan's tanking. It's down 4% right now. Nvidia's trying to find direction. ARM's turning red. SPY's trying to go up. The Qs are trying to go up. JP Morgan's coming back a little. Apple staying red. Nvidia's pushing red more. Costco. Tesla down about 1.2, but it's trying to come up. AMD's trying to bounce on our blue line right here. And you've got Qs again moving up. And trying to get that green there on ARM. Sitting at about 143. Really, really tough right now to try to see the direction here. But I really want to pay attention to this right now. This is... Yeah, Apple's recovering nicely here. I love the Apple investment right now. And I'd even consider getting some more Apple. But, okay, here we go. It's trying to go green. ARM, Nvidia, watching Costco. Enphase turns green. Goog. Tesla's still down more. AMD is getting stuck in the mud right there. And Tesla down about 133. Looking at Apple going green here. All right, let's listen in here for a moment.
$2 per barrel. Morgan Stanley actually publishes on the energy sector this morning. Hot summer, they say, expected. They like energy, basically on the fact that oil is moving higher, and that's going to raise the earnings estimates for the entire sector. They are working off a $94 a barrel price. And they say gas is bottoming too.
And it's, I mean, it's part of this general reflation trade everybody is now observing is well underway. So mining, materials, chemicals, it's all there. So
well, I want to see really what happens with these commodities.
Commodity-based stuff is working. We talked about, gold as a piece of that. Copper's participating as well. Honestly, on a 2-year chart, nothing looks that crazy in terms of getting out of the range. So it's still about kind of rebuilding from relatively low levels. The thing about the energy, pricing at this point too is because the economy is so strong, because wage growth has been fine, it's not as if they're destroying a ton of demand with WTI near $90 or gasoline prices pushing $4, national average again. So it's almost like part of the bull case is we can afford it, even though the prices are up.
Gold is the #1 best subsector. The gold miners are having another very strong day. Gold has been up for several weeks in a row, despite the strong dollar, whether it's geopolitical concerns, the fact that central banks have been buyers of gold.
There's
China's
capital
been
flight out
active.
of China. People are saying yes. So all of it, and a technical breakout, literally to a new all-time high in something that people have been buying for thousands of years. I think it has people excited. I'm nervous at the angle of the chart, but that's just me because I don't like things that are too easy in a short period of time. But it looks like it's got plenty of momentum here.
Apple shares actually have continued a bit of that momentum they showed yesterday. As again we pointed out, it had its biggest up day since May of last year, up 38 cents. But that revaluation, I'm not sure how to phrase it, but it's been so beaten down in a way in terms of the lack of an AI strategy, I guess, is in the view of any number of investors. Suddenly that changed yesterday. There was a Bloomberg story about the iMac, including some sort of new AI features. And then just in general, JP Morgan sort of putting out a piece out as well yesterday that seemed to capture the imagination of a number of investors, saying, is it ripe for an AI re-rating?
And I'm not even sure that it's suddenly something changed or suddenly we have insight on this. The stock has badly underperformed anything that looked like it in the market for a number of weeks. It got down to these levels around 170. Everyone says that seems like a bit of a floor. The valuation comes off the boil, and they can make these gestures to say we're part of it. We're going to anticipate the developers conference. That's coming up. That's now within sight, and that has actually been magic for all these companies that have one of those. With the possible exception.
Yeah, it's going to be so interesting just to see what this next earnings season is, just because there's so much enthusiasm going into this next earnings season. I'm really, really curious to see which way it goes. But Apple did go positive. Yeah, I've been concerned about Apple in March. On April 2nd, after I read the AI piece, I became pretty bullish. And so I increased my allocation to Apple a chunk. That was on April 2nd. And I think now we're finally starting to see some of that come to fruition, which is good. So I am excited about Apple, and they're kind of pulling off the next moves, I think, as expected. Now, this is going to raise the bar, though, for execution. So I'm excited about Apple. I'm still excited about Amazon as well. Amazon's down about 0.5% right now. It's only up about like $8 or $9 since when I bought it. And I've always been frustrated about Amazon's lack of ability to make a profit in their retail sector, but now they are. And so to me, that's a huge game changer. It's a data game changer. It's a catalyst for Amazon to basically hit all-time new highs, in my opinion. So I'm very excited about that. Let's see here. We've got NVIDIA that is down about 1.1 here. You've got AMD's down about 4. If they break this, okay, well, yeah. So literally just gonna go say if they break this line, it's bad, and then I click on it, and that's exactly what they're doing right now. Let me go to the non-average candlesticks. Let's see what happens. But yeah, so I think what we're going to do in the course member live stream, we're going to cover the Michigan survey, and that's going to be a driver of some plays, certainly on the Qs today. If we get basically, the data is going to come out, and these expectations are very low, in my opinion. Expecting 1-year inflation to be 2.9 and 5 to 10 to be 2.8 are very low. So I think it's going to be easy to get a bad read on that above expectations. But I don't know. I mean, just mostly because of oil prices. Let me see natural gas. Those really do affect people's expectations. So let me look at gasoline prices chart. Let's see here. Retail gasoline prices. Okay, here we go. Yeah. See, in my opinion, this is not so great for consumer sentiment. Well, how far does this chart even go out? Yeah, March 2024. So, we're really in this slide right here, this little right portion. So they're down from their peaks, obviously, but over the last 3 months, it's been straight up in gas prices. So you're looking at, instead of an average of $3.19 a gallon, $3.20 a gallon in December, January, you're at about $3.54. So you've seen about, a 30-cent increase here in some of these gas prices across the board. So, okay, let's be a little watchful of what's going on elsewhere here. Amazon's rotating down, trying to stable out on AMD. The Qs are still sitting down 90 bips. Apple continues to rocket. I'm pretty enthused by that. Nvidia is actually dropping quite a bit right now. 185 to the downside. You've got Costco dropping. DJT. And Tesla just recovered. Look at that. Tesla was down 1.3 to 1.4-ish%. And it just got some nice green candles, so you're recovering here. Another 3% on Intel. Boy, that trade is just getting bled to death. That sucks. Oops. You seem pretty stable, honestly, on the Qs, AMD. And now NVIDIA's trying to come back up. So you're trying to find your footing here. Very common at the earlier part of the day. Okay, so Tesla's sitting around 1%. Astera Labs, I'm gonna watch that one too. This one has a lot of volatility. Let me see where this one's sitting today. Let me go to the averages. Yeah, this one can move very rapidly. This one IPO'd, and this one has some crazy days when it moves. So does Super Microcomputer, SMCI. Let's see how they're doing. So those are always the fun ones for trading, because they just move so much. AMD's still down 4%. AMD just absolutely getting destroyed seems very interesting as well. I think that's probably after the Apple announcement. They weren't very happy either. They didn't trade happily. So, very interesting. Okay, let me see what the suits are saying here. So, all right. So, tech earnings will save stocks in the coming weeks. Oh no. No. Stocks are selling off on underwhelming bank results and Mideast tensions. Big tech giants will run to the rescue in the weeks ahead, with results poised to outshine the rest of the S&P 500. Yeah, but what if they don't? Oh, yikes. Yeah, AMD China. Yeah. Yeah. I don't know. Boy, China wants to get rid of all non-China. I mean, that's just the perfect way to try to punish the U.S. I mean, in fairness, they've got a lot of sanctions on China and restrictions on what kind of chips they could use. You're putting them, 2 or 3 generations behind. So you can't really blame China for being pissed, But anyway, so yeah, boy, it's a little bit of a red day today. I'm trying to see where's Life. Did BC? Oh, whoa, yeah. Look at BTC, 69 under 70 now. Oh, okay. So where's MicroStrategy? There's your short. Nah, I always type Microsoft. MicroStrategy. Stop. Micro. I literally put micro in. I mean, I guess that makes sense. Microsoft. Damn it. MicroStrategy. There we go. Yep. Yep. Oh, yeah. Oh, yeah. Let's see if that drop keeps dipping. The dip keeps dipping. All right. So this is this is probably the most scary screenshot I have here. And I'm going to screenshot this. So when people are like, don't worry, everything will be fine because earnings are going to save you, I get very nervous. Like, I like it when they're like, I don't know, man. Earnings might not be that good. This is scary to me. Okay, I'm gonna put that picture on eHack so that way y'all can see it too. Inline. Let's throw that here, here, here. Boom. All right. Put the little... Oh, yeah, I could just also share that screen. I fixed this computer, so I can just share the screen with y'all. Come on. Oh, man, MicroStrategy's dropping even more. The Dell is frozen. It's not a Dell, but... All right, so this is what I'm writing right here. Tech earnings will say... I write, this is scary to me. When forecasters start becoming convinced everything will be fine because we'll get massive beats, I worry beats are priced in and misses are not. Yeah, and that, I mean, can somebody look at that and just tell, am I wrong? Like, is that just pure hopium, or like, is this person right? You know, again, look right here. The group will command superior growth throughout the year, analysts project. A resilient economy ultimately bodes well for profits and keeps stocks from falling off a cliff. Okay. I mean, I guess if you wanted, you know, hopium, there you go. But, okay. All right. We'll see. Qs are trying to recover, actually, right now. So, Qs are trying to recover, and most of the AI plays are still kind of stuck in the same spot. So is BTC right now at 69.9. Let's see here. Oh, NVIDIA ended up going under the 895. That's funny. I had an option right at 895. Oh, that's funny. So, yeah. Can't always guarantee I'm going to make money, but if you want any of my buy-sell trade alerts, got some good trends or good ratio of wins to losses lately. Hope that continues. Took a little bit of an oopsie on an AI trade yesterday, but the Tesla trade yesterday was crazy. I didn't hold the option as long as I wish I could have or would have, but I had like 60K on an option, and I cut out way too early because it was a call option, and that call freaking doubled. It would have been 60K attendees had I held that sucker. It would have way offset any L on the AI trade, but I cut too early on it. But anyway, I know there are a lot of people who were messaging me like, I held on and it was the best option play of the year. So anyway, it's kind of cool. So yeah, we did a call on Tesla. I think I did 172.5, and we played that. I think it was right here. Yeah, there was this dip. It was right here, 172.5. This is where we got the option. So it actually lost money for about the first 10 minutes. Not uncommon. And then, I mean, it was like straight up from there. It was crazy. So, and look at it behave with the lines. It likes the lines. You must trust the lines. So, but yeah, I wish I didn't cut too early on that. So, somebody here says I had Apple calls and closed early in the afternoon. I'm telling you, man, it's like the worst. Somebody says, wait, trade alerts aren't guaranteed? Yeah. Like, you'll get the alerts and you're not guaranteed to make money. But, yeah, that's one of the things about trading is like, you'll make a good trade, then you'll make some money, and then you're like, cool, you close it, you make some money. And the worst part is looking back, doing the FOMO, like damn, I could have made more. Because you could have also lost a lot more, right? So, but that's just human psychology, you know. That's just the way. Exactly, you got your tendies, exactly. So, very normal. Honestly, with trading, like, your biggest enemy is usually yourself. Because, like, you know, you get emotional. Like, anyway, we'll talk more about it in the Course Member live stream, because we've got some trades, I think, to play coming into the Michigan report. So we're gonna jump on over. We're gonna do some trade talk. And I'll talk to y'all soon. So let me go ahead and push the button here, and we'll look at some more sticks as this plays. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. We still barely have a page of green. Like, we do not have a page of green yet. And the volatility index is up like 11%. Somebody actually shouted out earlier when we were covering that VIX piece, like go long on the VIX as a hedge. That ended up working out. But anyway, gotta focus on what to do next. So how do you join the live stream? Make sure you watch lecture 1.0. If you have issues or you need a bundle coupon, email us at staff@meetkevin.com. I'm gonna jump on over. We're gonna do the Michigan live report with course members. We're gonna go right into it. I'm not even gonna make another cup of coffee because I gotta get to the plane. Thanks so much, folks, and we'll see you in the next one. Bye.